In this video, we're going to talk about an indicator that you can use to identify pullbacks within the bullish and bearish trends of a financial asset. This indicator is particularly useful for traders who love trading trend-following strategies. Stay tuned to the end of the video because we're going to combine this indicator with an existing strategy so you can have a better understanding of how you can also incorporate it into your own trading system. If you find value in this video, remember to leave a like. Let's get into it. Now, this indicator is called the Andean Oscillator. To add it to your chart, go to TradingView and open any forex pair that you like to trade in any time frame. For me, I'm going to be using USD CAD. Then click on Indicators, type in Andean Oscillator, and it's going to be this one by Alex Grover. Now, the Andean Oscillator is a technical indicator. It's designed to measure and highlight the degree of variations in individual uptrends and downtrends in the price of a financial asset, such as a stock or a currency pair. This indicator is particularly useful for traders who want to identify the strength and direction of the current trend in the market. Now, let's take a look at what it's made of. This indicator is super simple. As you can see, it's composed of three components: the green, red, and yellow lines on the chart. The green line is called the bullish component, the red line is the bearish component, and the yellow line is the signal line. When the bullish component rises above the bearish component, it indicates the presence of bullish price variations. This suggests that the market is in a bullish trend and traders can expect new higher highs in the price. Conversely, when the bearish component rises above the bullish component, it indicates bearish price variations. This suggests that the market is in a bearish trend and traders can expect new lower lows in the price. Now, what is the purpose of the signal line? Well, the signal line provides a more refined interpretation of this indicator. It can be used in several ways, including as a filter to reduce the signals generated by the crosses between the bullish and the bearish components. Traders may consider entering a position when the bullish or bearish component crosses over the signal line, as this can help confirm the trend's direction. Looking at the settings of this indicator, we can see very few customizable options. We can change the length, which will increase or reduce the indicator's sensitivity to price fluctuations. A lower length, like 10, will make the indicator more sensitive to price and produce more crossovers between the green and red lines. We do not want too many signals, so we're gonna keep this at 50. Increasing it to a higher number, like 200, will capture longer-term market trends. For a balance of both, we're gonna stick with 50. The signal length affects the length of the signal line. In the strategy I'm gonna be showcasing in this video, we're not gonna be using the signal line, so we won't be changing this number. In fact, let's go to the Style tab and disable the signal line. After that, click OK. Next, we will explore how we can use this indicator to trade. But before that, let's talk about hankotrade. Now, you may be thinking, and what exactly is hankotrade? Well, hankotrade is one of the most reliable forex brokers out there, and for that reason, I use them every single day. As you can see here, this is my trading history. I mainly scalp gold, and up here you can see that this is actually a live account. The reason why I love hankotrade so much is because of their extremely low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest spreads can go. And for those of you who love high leverage, guess what? hankotrade offers a maximum leverage of 1 to 500. And if that's not enough, they're also going to give you a 100% bonus for all your first deposits up to $25,000. So if you deposit, say, $500, they're going to give you a bonus of $500, so in total you'll have $1,000 to trade with. To access the bonus, as well as all the other perks, sign up to hankotrade using the link in the video description. Now, back to the video. One of the methods that we can use to trade with this indicator involves entering a long position when the bullish component, this green line, crosses above the bearish component. Conversely, to enter a short position, we wait for the bearish component, the red line, to cross above the bullish component, and then we enter our position. However, trading with this indicator this way is not advisable because many false signals are generated when the market is ranging. To address this, we're going to add a long-term trend filtering tool and a buy-sell signal indicator to our chart. Open the indicator search tab and type in Lawrence Activator. Select this one created by Alex Grover. Next, type in UHLMA crossover and select this one by Alex Grover. Then double-click on the GLA indicator, which is this buy-sell signals indicator. Then on the Inputs tab, change the length to 500. For the multiplier, we're gonna change it to 2. Then inside the Style tab, disable the Activator option, the Buy circle, and the Sell circle. Then click OK. For the UHLMA indicator, we're gonna stick with its default settings. The UHLMA indicator is a version of the moving average. We're going to be using it to identify long-term trends in the market. A bullish trend is identified when the blue moving average is above the red moving average with the area in between them filled with blue. Conversely, a bearish trend is identified when the blue moving average is below the red moving average and the area between them is filled with red. The GLA indicator is going to be used to generate the buy and sell entry signals. When it says buy, we buy. When it says sell, we sell. Pretty self-explanatory. Now, let me show you an example of how we can use these 3 indicators to enter a long position. For a long position, first, we want to confirm that the market is in a bullish trend using the UHLMA indicator. How we're going to do that is, as mentioned earlier, you just make sure that the blue moving average is above the red moving average and the area in between is colored blue. This indicates a bullish trend. Second, we need to identify a pullback within this bullish trend. For that, we're going to focus on the Andean Oscillator. We want to make sure that this green line goes below the red line and then back above the red line. This indicates a market pullback. For the pullback to be valid, the price should not touch this red moving average of the UHLMA indicator. So basically from here to here, none of these candles should touch this red line. Next, we want a buy signal to be printed by the GLA indicator. This is going to represent our entry candle. As a final confirmation, we can see that there was a resistance level right here and the price broke above it and later did a retest of that level. This is going to increase the probability of the price heading in the direction of our trade. All our entry conditions are met on this candle, so we're going to enter a long position. Set the stop loss below the most recent swing low. For the take profit, we're going to set it at 2 times the risk. We let this trade run and it hits take profit. Now for a short position, we're going to do the opposite. So first, we want to confirm that the market is in a bearish trend. To do that, you just make sure that this blue moving average of the UHLMA indicator is below the red moving average and the area in between them is colored red. This indicates a bearish trend. Second, we need to identify a pullback within this bearish trend. For that, we're going to focus on the Andean Oscillator. We want to make sure that this green line goes above the red line and then back below the red line. This indicates a market pullback. For the pullback to be valid, the price should not touch the blue moving average of the UHLMA indicator. So from here all the way to here, none of these candles should touch the blue line. Next, we want a sell signal to be printed by the GLA indicator. This is going to represent our entry candle. As our final confirmation, we can see that there was a resistance level right here and the price rejected off it multiple times. This is going to increase the probability of the price heading in the direction of our trade. All our entry conditions are met on this candle, so we're going to enter our short position. Set the stop loss right above the most recent swing high. For the take profit, we're going to set it at 2 times the risk. We let this trade run and take profit. In summary, the Andean Oscillator or the Andean Oscillator is a technical tool that quantifies and visualizes the degree of price variations in both uptrends and downtrends. Traders can use its components as well as the signal line to assess the direction and strength of the current market trend. If you're interested in this particular trading tool, you can check it out on TradingView and use it alongside your own trading strategy. I hope you found some value in this video. If you did, hit the like button below. and consider subscribing to stay tuned. Thanks for watching. See you next time.